Wall Street is ready for a new trading week. Let's discuss the outlook and ongoing market sentiment on US markets. Stock investors are likely to keep pessimism today like they did last trading week. Wall Street was trading in the red in the New York pre-market. Major stock indexes shed 1.3 or 2%, suggesting another gloomy day ahead. Wall Street indexes closed last week with losses. The Dow Jones edged down 0.3% and the Nasdaq printed the heaviest loss of 1.4%, the worst weekly loss since 2020. The index closed in the red for the 5 weeks straight, having extended the longest losing streak since late 2012. The S&P 500 fell just 0.6% to close at 4,046 points. The US stock market is set to continue its decline, heading for its bottom. The S&P is approaching the psychological level of 4,000 points. There is a 50-50 chance of a further bounce or a lower drop. The expected corridor for the index is seen between 3,990 and 4,040 points. The stock market is still overwhelmed by the doom and gloom. Investors share the bearish outlook. The S&P 500 has tumbled 13.5% since the beginning of the year. Wall Street is wound down by the prospects of a Fed's aggressive monetary tightening. Besides, investors are stoking fears about a slowdown in the global economy. And in this context, big tech stocks are the most vulnerable. They were also affected by serious logistic problems because of China. Stocks of high-tech giants with a huge market capitalization, such as Microsoft, Amazon, Apple, Alphabet, Meta, and Tesla, fell notably on Friday. On Monday, they are expected to fall for the third day in a row. Upbeat employment data reinforced the market faith that the Federal Reserve has enough tools for more aggressive rate hikes to fight soaring inflation. Fresh inflation data is due on Wednesday, May 11. It will give a fresh impetus to the market. Before that, investors will look for clues in the remarks from a few Fed's policymakers. They will hardly make any dovish comments. The US dollar is shining gloriously amid the gloomy stock market. Its index opened a new week at 104.00, the highest mark in almost 20 years. The greenback failed to retain his white. Analysts think this is a question of time. They foresee the index at 107 points in the medium term. The corridor for today is defined between 103.50 and 104.10. So the US dollar feels on the top of the world. Yields of a 10-year US Treasuries jumped to 3.173%, the highest level in more than 3 years. Amid the dismal prospects of the global economy, investors prefer to withdraw their savings from risky assets in favor of the US currency. At the same time, the firm US dollar is putting a strain on other currencies. The euro briefly slumped to the level before 1.05, and the yen weakened to the lowest level of 2002. Despite the following bounce in the popular currency pairs, the US dollar is extending its reign. It could find support from the inflation report on Wednesday. The US CPI is expected to slip marginally, which will assure the Fed Reserve to go ahead with its fast rate hikes at a pace of 0.50 or 0.75%. This is bullish for the US currency. The USD CAD pays no exception. It's given in to its American rival. The loonie weakened to 1.2919, the lowest level for 19 weeks. The currency pair is likely to trade today in the corridor between 1.2880 and 1.30. Like other currencies, the Canadian dollar is unable to compete with the traditional safe haven US dollar, despite the fact that the Bank of Canada is no less hawkish than the Fed Reserve and the domestic economy is healthy. It's not enough for the market to notch the pair down to the levels of the early year. Oil prices are declining on Monday, though they are still at elevated levels. They cannot provide the loonie with a proper support, and the economic calendar is almost empty this week. Evidently, the US dollar is set to hold the upper hand over its Canadian peer. Trading sentiment in the crypto market is even worse today than on Wall Street. Cryptocurrencies are taking a nosedive. Bitcoin has been falling for 5 days straight. The token has lost 13% in May alone. It has lost a third of its value since the beginning of the year from the historic high of $69,000 in November 2021. By the moment of recording this video, the flagship crypto tumbled to $32,890 without any reversal sign. The opposite correlation with the US dollar index and the direct correlation with the Nasdaq does not bode well for Bitcoin. The question is to what extent it might fall. Recently, analysts defined 33,000 as the bottom, and now they are trying to puzzle out whether the crypto could fall as low as 30,000 in the medium term. As for the forecast for today, the token is likely to approach 32,200, where it will slow down or accelerate its bearish move. And here is the intraday review of the US markets. Despite extremely bearish forecast for the stock market, we should wait for the US inflation data. So we are not sure, certain in the Fed's aggressive moves. Hence, traders will be able to earn from volatility. Follow developments in financial markets on InstaForex TV channel. See you tomorrow.